Based on the historical data and forecast, Bitcoin exhibits a sideways trend with a slight downward bias. The RSI consistently hovers below 50, indicating a generally weak momentum, and has been in the oversold territory, below 30, for a significant portion of the period. The forecast for the next week predicts a continued decline, with prices ranging from $61,700 to $60,600. Considering this, a contrarian strategy focusing on short-term bounces around the support level is recommended. We will initiate a long position at $61,300, placing a stop-loss order at $60,600 to limit potential losses if the price continues to fall. The target price for this trade will be $64,100, aiming to capitalize on a potential bounce towards the resistance level. To refine this strategy, we will incorporate the Bollinger Bands. The price is currently near the lower band, suggesting a potential rebound. If the price touches the lower Bollinger Band, around $60,600, we will enter a long position with a stop-loss at $60,200 and a target price of $63,500. This approach leverages the mean reversion properties of the Bollinger Bands. The combined RSI and Bollinger Band strategy offers a balanced approach, combining momentum indicators with volatility bands for enhanced risk management and potential profit capture. Based on the historical data and forecast, Ethereum shows a slight upward trend with price fluctuations. The RSI consistently hovers below 60, indicating a generally neutral to slightly bullish sentiment, with readings below 30 suggesting oversold conditions. The Bollinger Bands have been widening, suggesting increased volatility. Considering the current RSI of 53.9 and the forecast prices remaining around $1,760 to $1,780, I recommend a moderately bullish strategy. We will initiate a long position at $1,760, placing a stop-loss order at $1,740, right at the support level, to mitigate potential losses. The initial target price will be $1,810, aligning with a recent resistance level. To refine this strategy, we will incorporate the Bollinger Bands. If the price breaks above the upper Bollinger Band, indicating a strong bullish momentum, we will raise the target price to $1,880. Conversely, if the price touches the lower Bollinger Band, we will consider tightening the stop-loss to $1,730. This dynamic adjustment ensures we capitalize on upward momentum while minimizing risk during downturns. This portfolio combines RSI and Bollinger Bands to create an efficient strategy for high returns. Based on the historical data and forecast, BNB shows a downtrend, with the price fluctuating between a support of $546 and a resistance of $567. The RSI consistently remains below 50, indicating a prevailing bearish momentum. The Bollinger Bands show the price moving towards the lower band, suggesting further potential downside. Therefore, I recommend a short selling strategy. Entry price will be $560, with a stop-loss set at $575 to protect against a potential upward reversal. The initial target price is $546, aligning with the established support level. To refine this strategy, I will incorporate the RSI and Bollinger Band signals. When the RSI dips below 30, consider entering a long position at $555, with a stop-loss at $553 and a target price of $558. Conversely, if the price touches the lower Bollinger Band, enter a short position at $555, with a stop-loss at $556 and a target price of $553. Combining these three strategies, I will prioritize the short selling strategy, allocating 60% of the portfolio to it, 20% to the RSI-based long strategy, and 20% to the Bollinger Band-based short strategy. This diversified approach aims to maximize returns while mitigating risk. Based on the historical data and forecast, XRP shows a slight downward trend recently, with the forecast prices consistently around $1.04 to $1.06. The RSI indicates oversold conditions, fluctuating between 31.8 and 54.8, with a recent dip below 40, suggesting a potential bounce. The Bollinger Bands show the price has been approaching the lower band, indicating possible volatility and a potential rebound. Considering these factors, I recommend a contrarian strategy focusing on short-term gains. We will enter a long position at $1.04, placing a stop loss at $1.03 to protect against further downside. The initial target price will be $1.1, aiming to capture a quick profit as the RSI recovers and the price bounces off the support level. To refine this strategy, we will incorporate the Bollinger Bands. If the price touches the lower band around $1.03, it strengthens the buy signal. If the price reaches $1.1, we will move the stop loss to the middle of the Bollinger Bands, around $1.09, to secure profits and manage risk. A secondary target price of $1.16, the resistance level, can be considered for a more ambitious gain, but with a wider stop loss adjustment. This combined RSI and Bollinger Bands approach aims to capitalize on short-term volatility while mitigating risk through strategic stop loss placements and profit-taking targets. Based on the historical data and forecast, Solana has shown a downtrend from June 30, 2026, to July 13, 2026, with a recent dip in RSI to 46.5, indicating an oversold condition. The forecast for July 14, 2026, to July 20, 2026, suggests a continuation of this downtrend, with prices ranging from $76.4 to $74.0. Considering the support price of $73.2 and the RSI oversold signal, I recommend a short position at $76.4. Set a stop loss at $78, just above the recent resistance, and a target price of $73.2, aligning with the support level. This strategy aims to capitalize on the anticipated downward movement while limiting potential losses. To refine this strategy, we can incorporate Bollinger Bands. The price consistently trading near the upper band suggests potential downward correction. The RSI indicates an oversold condition at 46.5, reinforcing the short position. I would adjust the target price to $74, aligning with the forecast and the lower Bollinger Band. The overall portfolio will be 60% short position on Solana and 40% in cash, allowing flexibility to adjust the position based on market changes. This combined approach leverages both momentum and volatility indicators for a more robust investment decision. Based on the historical data and forecast, TRON shows a slight upward trend from June 30, 2026, to July 13, 2026, with a recent pullback. The RSI consistently fluctuates around 50, indicating neither strong overbought nor oversold conditions. However, the forecast suggests a downward movement in the coming week, potentially testing the support level of $0.318. Considering this, I propose a contrarian strategy. We will enter a long position when the price touches the support level of $0.318. The stop loss will be set just below the support at $0.316 to minimize potential losses. The initial target price will be the nearest resistance level at $0.332. To refine this strategy, we will incorporate the Bollinger Bands. If the price approaches the lower band around $0.314, it signals an oversold condition, reinforcing our long entry at $0.318. If the price breaks below the lower band and the forecast confirms further decline, we will adjust the stop loss to $0.315. A more aggressive target could be the upper band at $0.336 if the upward momentum strengthens. This combined approach, utilizing both RSI and Bollinger Bands alongside support and resistance levels, aims to maximize potential returns while managing risk effectively. The portfolio will be 60% long TRON at $0.318 with a stop loss at $0.316 and a target at $0.332, and 40% in cash. Based on the historical data and forecast, Dogecoin shows a downtrend. The RSI consistently remains below 50, indicating a prevailing bearish sentiment. The forecast predicts further decline, with prices dropping to $0.0683. The support price is $0.0681, acting as a potential floor. The Bollinger Bands are narrowing, suggesting decreasing volatility. Given these factors, I recommend a short position. Entry price should be $0.0719, with a stop loss placed just above the recent high of $0.0743, setting it at $0.0744. The target price should be near the support level, aiming for $0.0681. To refine the strategy, we'll incorporate RSI signals. When the RSI falls below 20, oversold, it could indicate a temporary dip before a potential bounce. However, with the overall downtrend and bearish forecast, I'll prioritize the short position. The portfolio will allocate 60% to the short position, entry $0.0719, stop loss $0.0744, target $0.0681, and 40% to a conservative strategy that waits for a confirmed bounce above the $0.0758 resistance before considering a long position, minimizing risk in this bearish environment. This combined approach balances potential gains with risk mitigation. Based on the historical data and forecast, Zcash demonstrates a volatile trend with periods of consolidation and upward movement. The RSI consistently fluctuates above 50, indicating a strengthening momentum. The Bollinger Bands have widened recently, suggesting increased price volatility. Considering the support price of $484 and the resistance price of $535, and the forecast predicting prices around $500 to $528, a combined strategy leveraging RSI and Bollinger Bands is recommended. We will enter a long position when the RSI dips below 45 and a price touches the lower Bollinger Band. The entry price for this long position will be $499, placing a stop-loss order at $484 to protect against potential downturns. The initial target price will be $510, aligning with the upper Bollinger Band and a moderate profit target. If the price reaches $510, we will adjust the stop-loss to the entry price of $499 to secure profits and protect against a reversal. The ultimate target price will be $528, based on the forecast data and the resistance level. This strategy aims to capitalize on the upward trend while managing risk through strategic stop-loss placements. Based on the historical data and forecast, Stellar shows a downtrend. The price has been fluctuating between a support of $0.143 and a resistance of $0.189. The RSI indicates that the asset is generally in a neutral to slightly oversold territory, with values ranging from 42.4 to 56.6. The Bollinger Bands show that the price is currently near the lower band, suggesting potential for a bounce. The forecast for the next week indicates a continued downtrend, with prices falling to $0.175. Therefore, I recommend a short selling strategy. We will initiate a short position at $0.186. Given the downtrend and proximity to the resistance level, the stop loss will be set at $0.191 to protect against a potential short covering rally. The initial target price will be $0.175, aligning with the forecast. If the price reaches $0.175, we will reevaluate the situation and potentially adjust the target price further down to $0.143, the support level. This strategy combines technical indicators and price action to capitalize on the predicted downtrend while managing risk effectively. Based on the historical data and forecast, Chainlink shows a slight upward trend with price fluctuations around the $7.75 to $8 range. The RSI consistently hovers around the 40 to 55 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation. Considering these factors, I recommend a moderately bullish strategy. We will initiate a long position when the RSI dips below 35, signaling a potential oversold condition. Specifically, we will enter a long position at $7.73. The stop loss will be set just below the support level at $7.64 to protect against unexpected downside moves. The initial target price will be the resistance level at $8, aiming for a quick profit. To refine this strategy, we will incorporate the Bollinger Bands. If the price touches the lower band, it reinforces the oversold signal and provides a more precise entry point. If the price breaks above the upper band, it suggests a strong upward momentum, prompting us to consider raising the target price to $8.24. However, we will maintain the stop loss at $7.64. This combined RSI and Bollinger Bands approach offers a balanced strategy, capitalizing on potential upward movements while mitigating risk through strategic stop-loss placement. The portfolio will prioritize the combined RSI and Bollinger Band strategy due to its enhanced precision and risk management capabilities. Based on the historical data and forecast, Aster shows a slight upward trend, hovering around the $0.63 mark. The RSI consistently remains between 44 and 53, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation. Considering these factors, I propose a moderately bullish strategy. We will initiate a long position at $0.624. A stop loss will be placed just below the support level at $0.618 to protect against a potential downside reversal. The initial target price will be set at $0.638, aligning with the forecast price and the upper end of the recent trading range. To refine the strategy, we'll incorporate the Bollinger Bands. If the price breaks above the upper band, we'll adjust the target price to $0.645. Conversely, if the price touches the lower band, we'll tighten the stop loss to $0.62. This dynamic adjustment will help capitalize on momentum while mitigating risk. This portfolio combines technical analysis and price action to maximize returns while minimizing potential losses, ensuring a balanced and adaptable approach to Aster trading. Based on the historical data and forecast, Near Protocol shows a mixed trend with periods of consolidation and slight upward movement. The RSI consistently stays within the 39.3 to 52.5 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been fluctuating, with the price occasionally touching the upper and lower bands. Considering the forecast for the next week, the price is expected to hover around $1.87 to $1.89. Therefore, I propose a moderately bullish strategy focusing on short-term price movements. My strategy involves a combination of RSI and Bollinger Band signals. I recommend entering a long position at $1.87, coinciding with the support price and a potential bounce-back opportunity. Set a stop loss at $1.85 to limit potential losses. The initial target price should be $1.92, aligning with the resistance level. If the price breaks above $1.92, consider raising the target price to $1.94. The RSI readings suggest that the asset is not currently overbought, allowing for potential upside. This strategy aims to capitalize on short-term fluctuations while managing risk effectively. Based on the historical data and forecast, Dogwifhat shows a downtrend with recent price fluctuations. The RSI consistently hovers around the 40s, indicating a slightly oversold condition. The Bollinger Bands have been widening, suggesting increased volatility. The forecast for the next week predicts a continued downtrend, with prices fluctuating between $0.148 and $0.15. Considering these factors, I recommend a contrarian strategy, anticipating a potential bounce from the support level of $0.149. My strategy involves a long position entry at $0.149. Given the oversold RSI and the proximity to the support level, I'll set a stop loss at $0.141 to limit potential losses. The initial target price will be $0.158, aligning with the recent resistance level. If the price reaches $0.158, I will move the stop loss to the entry price of $0.149 to secure profits and potentially hold for a further move towards $0.166. This strategy combines RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while managing risk effectively. Based on the historical data and forecast, POL Xmatic demonstrates an upward trend. The RSI consistently stays below 65, indicating that the asset is not currently overbought. The price has been fluctuating within the Bollinger Bands, with recent movement suggesting a potential breakout above the upper band. Considering these factors, I recommend a long position. We will enter a long position at $0.0807, aiming to capitalize on the anticipated upward momentum. The stop loss will be set at $0.0729, just below the support level, to protect against potential downside risks. Our target price will be $0.0848, aligning with the forecast for July 20, 2026. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we will consider an additional entry at $0.0674, with a stop-loss at $0.0682 and a target price of $0.0795. Conversely, if the price breaks above the upper Bollinger Band, we will maintain the initial long position with a revised target price of $0.0838. This layered approach combines trend analysis with technical indicators to maximize potential returns while mitigating risk. The portfolio will prioritize the initial long position at $0.0807, adjusting based on RSI and Bollinger Band signals as they arise. Based on the historical data and forecast, Jupiter shows a downtrend with increased volatility. The RSI consistently hovers around the mid-range, indicating a lack of strong momentum. The Bollinger Bands have widened, suggesting increased price fluctuations. The support price is consistently at $0.201 and the resistance price is $0.214. The forecast for the next week predicts a continued downtrend, with prices ranging from $0.213 to $0.206. Considering this, I propose a short selling strategy. We will enter a short position at $0.213. The stop-loss should be set slightly above the resistance at $0.216 to protect against unexpected upward movements. Our target price is the support level of $0.201, aiming for a profit of $0.012. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. When the RSI dips below 40, indicating an oversold condition, we'll consider entering a short position. Conversely, if the price touches the lower Bollinger Band, it might signal a potential bounce. However, given the overall downtrend, we will prioritize the initial short selling strategy. If the price reaches $0.201, we will take profit. If the price hits the stop-loss at $0.216, we will cut our losses and reevaluate the market conditions. This combined approach maximizes profit potential while minimizing risk. Based on the historical data and forecast, Lido DAO shows a clear upward trend. The price has been consistently moving above the support price of $0.276, and the RSI has been fluctuating between 31.4 and 71.2, indicating periods of both oversold and overbought conditions. The forecast for the next week projects a continued increase, reaching $0.331. The Bollinger Bands also suggest a potential for upward movement, with the price often approaching the upper band. Therefore, I propose a long-term investment strategy focusing on capitalizing on this upward trend, while mitigating risk through strategic stop-loss placements. My recommended strategy is to enter a long position at $0.312, coinciding with the initial forecast price. A stop-loss order should be placed at $0.298, just below the lower Bollinger Band and providing a buffer against short-term price fluctuations. The initial target price is set at $0.325, aligning with the forecast price for July 19, 2026. If the price reaches this target, we will consider moving the stop-loss to the entry price of $0.312 to protect profits. A secondary target price of $0.331, the final forecast price, will be set for maximizing potential returns. This strategy combines the upward trend, RSI signals, and Bollinger Band analysis to provide a high probability, high reward investment opportunity. Based on the historical data and forecast, Curve DAO has shown a fluctuating trend with a slight upward bias. The RSI consistently remains below 80, indicating that the asset is not currently overbought. However, it has been frequently approaching the oversold level of 20, suggesting potential buying opportunities. The Bollinger Bands indicate periods of volatility, with the price occasionally touching the lower band, signifying a potential oversold condition. Considering these factors, I propose a strategy focused on capitalizing on these periodic dips. My recommended strategy is to implement a series of strategic long positions. The entry price should be $0.204, coinciding with a recent dip and a touch of the lower Bollinger Band. A stop-loss should be set at $0.184, just below the bottom of the Bollinger Bands, to limit potential losses. The target price should be $0.223, aligning with the forecast price and the upper Bollinger Band. This strategy aims to capture the anticipated upward movement while mitigating risk through a conservative stop-loss. This approach combines RSI oversold signals, Bollinger Band support, and forecast data to maximize potential returns. Based on the historical data and forecast, Jito has shown volatility with a general downward trend recently, bouncing between the support of $0.6 and a resistance of $0.798. The RSI fluctuates around the midpoint, indicating neither strong overbought nor oversold conditions consistently. The Bollinger Bands have been widening recently, suggesting increased volatility. Considering the forecast for the next week, which predicts a range between $0.635 and $0.668, and the recent price action, I recommend a cautious strategy focusing on short-term opportunities. My proposed strategy is a combination of RSI and Bollinger Bands. We will initiate a long position when the price touches the support level of $0.6 and the RSI falls below 45. This condition occurred on July 10, 2026, with a close price of $0.599 and an RSI of 41.6. The entry price will be $0.6. The stop loss will be set at $0.58, just below the lower Bollinger Band to account for potential downward movement. The target price will be $0.66, aligning with the upper end of the forecast range and a reasonable profit target given the current volatility. If the price hits $0.66, we will take profit and exit the position. This strategy aims to capitalize on short-term bounces while mitigating risk with a conservative stop loss. Based on the historical data and forecast, EIGEN Eigenlayer, exhibits an overall upward trend, albeit with volatility. The price has consistently bounced off the support level of $0.205, and the forecast suggests continued upward momentum, peaking at $0.242. The RSI fluctuates between 43.1 and 57.6, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increased volatility. We will implement a three-pronged strategy combining RSI, Bollinger Bands, and support/resistance levels. Our primary strategy will be a long position based on the RSI. When the RSI dips below 40, we will enter a long position. For example, if the RSI falls to 38, we will enter at $0.22. Our stop loss will be set just below the support level at $0.20, and our initial target price will be the resistance level of $0.25. We will also utilize the Bollinger Bands for confirmation. If the price touches the lower band, it strengthens our buy signal. If the price approaches the upper band, we will consider taking partial profits and moving our stop loss to break even. The portfolio will be weighted 60% towards the RSI strategy, 20% towards the Bollinger Band strategy, and 20% towards the support/resistance strategy to maximize potential returns while managing risk. Based on the historical data and forecast, Kite demonstrates a volatile trend with periods of consolidation and upward momentum. The RSI consistently remains below the oversold level of 20 until July 13, 2026, suggesting a potential accumulation phase. The Bollinger Bands indicate that the price has been trading near the lower band for a significant portion of the period, which can indicate a potential buying opportunity. Considering the recent upward trend and the forecast prices hovering around 0.111 to 0.117, a long position is warranted. I recommend entering a long position at $0.111 plus $, with a stop loss placed just below the lower Bollinger Band at $0.0963 plus $, to mitigate potential losses. The initial target price should be set near the resistance level of $0.178 plus $, aiming for a substantial profit. To refine the strategy, we can incorporate the RSI signal. If the RSI crosses above 30, it would be a good time to take profit at $0.115 plus $. If the price reaches the resistance level of $0.178 plus $, we can move the stop loss to the entry price of $0.111 plus $, to lock in profits. This combined strategy leverages both Bollinger Bands and RSI to identify optimal entry and exit points, maximizing potential returns while minimizing risk. The portfolio will be 60% long position, 20% stop loss, and 20% target price.